Good afternoon, everyone. It's Dr. K and Gil Morales with you today. Let's get right to it. The NASDAQ, the S&P, the Dow, all the major indices continue to trend higher. This is after a fairly constructive tight sideways consolidation as witnessed on the NASDAQ, for example, and then broke out just recently to the upside to new highs. And we're seeing accompanying action on the part of leading stocks. You'll notice that there have been a larger number of actionable stocks as a result of positive market action. In other words, it's best to always remain organic in terms of your watch list and in terms of what you actually buy. So with the uptrend intact, it's no surprise that we are more heavily exposed to the market on the long side. And it's so far all systems go. We sent out a report earlier today about the state of quantitative easing, and of course, price volume action rules all. So if in the event the market cannot continue in its uptrend as it has, should the market act differently than it has in the past with quantitative easing, then we'll see that in the price volume action. But also, it's mindful to know that these minor market corrections have always found their floor and moved the market higher in a quantitative easing environment. So the report we sent out was basically our view on how to handle this current environment and to perhaps not get so worrisome or fearful of price volume action that indicates the market's going to go lower. Just because in the past so far, since 2009, QE 1, 2, and 3 and Operation Twist have resulted in corrections to the market of no greater than typically 10%, maybe 11 or 12% maximum in the NASDAQ, and then less than 10% in the S&P. So it's mindful to be aware of all of that. And of course, it's a tricky business because when the markets are off 9, 10, 11%, that's exactly when people start to say, oh, we're going to correct a lot more steeply, because historically when markets correct more than 10%, they usually correct down to 20%. But this is an environment we're in which is unprecedented, and the QE effect is alive and well, and that puts a floor under the markets when they get to that level so far. Gil, you want to add anything to that? I can't hear you.
Oops, here we go. Turn on my microphone. That might help a little bit. I think it's interesting that, while you were seeing the market go through this area in here last week and the week before, as we were correcting, you had a gap down here on heavy volume. You had a stalling day here on heavier volume. You had another stalling or reversing day here on heavier volume. Here you picked up volume very strongly and moved higher, which was constructive. And then again, you have stalling action here and here, but the index is moving higher, and it's interesting how you do run into some selling, at least on an index basis, and then the market just continues higher. And I think one of the clues that the market just wants to go higher is the fact that you're seeing a lot of stocks just jacking to the upside. And I think the other day on the chat room we were noticing there was something like 28 gap ups in the morning. I think that's sort of typical of earnings roulette season, where you see gap ups occurring and also gap downs occurring all over the place. But I think we picked off a few of the better gap ups for you, and then I'll go through some of those. I mean, obviously the big stock of the day today is LinkedIn, not Mylan, which is up there. I'm not sure how that got up there, but LinkedIn, which is gap down. This is the second gap up in the pattern, and so it's doing the same thing again. It's like you got to wait for earnings to come out. Last time it gapped down after earnings, built a new base, and it's coming out the top. So this might be considered. It's hard to say. Dr. K, would you look at this as a first stage base, given the fact that what happened here, you broke out. This is a second stage base here. You broke out, you failed, and then you undercut the lows of this prior base and set up again. Would you call this a first stage base?
Yeah, because it actually did undercut those lows of that first base. The first basing pattern, it's a short base, 3, 4, 5, 6, 7.
Yeah, it's more a flag.
you know, it's if you consider the start of the base earlier than that, then it hasn't undercut it. But if you look at the start, and I mean, I'm counting 1, 2, 3, 4, 5, 6 weeks. It's a 6 week base. It's pretty flat. So that could qualify, I suppose, as a flat base that's been undercut, and therefore resets the count. And so then this would be the first stage breakout.
So you're back, yeah. So I think that, as I've been talking about in the chat room, I'd like to see stocks that are closer to first stage pattern on a viable gap up. That's generally where they have their better moves. Once you get long in the tooth, like say for example this Illumina, which we're watching, it's had a gap up here. It did come out of this space. So, but it hasn't really formed. I guess you call this a second stage, maybe a third stage. Here's a flag, and so this isn't really moving anywhere. Lumber Liquidators has been acting okay, but it's also had two gaps in the pattern. And I think when you can determine that you have closer to a first stage base or an earlier stage base, I think that they'll tend to have more upside power. So, you're seeing the stock right now pitching to the upside, and the gaps, the intraday low of the gap up at 228.80 is pretty clear now. So that's about what, 3-4% from here, Dr. Yeah, that's about right. So you're pretty tight on your stop. So it's not really out of range. It might hang out and pull in. You've seen that with a few of them. Yesterday we talked about Trulia on the gap up coming out. I think this is a first stage base. It's had plenty of time to set up. You had a breakout from this sort of cup. I mean, if you wanted to, I guess you could look at this as some giant, ugly cup with handle. But it broke out. You had the gap up move. Tested the low this morning, so it actually becomes viable. In fact, we were in the chat room yesterday and was up around 48, and I was citing the Steve Miller song, "Take the Money and Run," because at that point, the stock was up, I think, 26% and change, and all in one day, and that was on top of a 10 or 15% gap. So you've got huge upside on that. It's probably going to pull back, and it did, and so you get to buy it back down near the lows today if you wanted to do that, and that's working pretty well. Yelp gapping up. I remember on Wednesday after hours, I was watching CNBC, and they had the fast money or whatever, and those guys were saying that you don't want to initiate a position in Yelp here. It's too high and blah, blah, blah. But notice the stock had a little move yesterday on the gap up, and then today it kind of gets going. Sometimes they'll be slower, sometimes faster. But in this case, I think you might have a fair number of shorts in the stock, and it's jacking to the upside. So, anyways, but in our morning report, our pre-market pulse, we're sort of revising it and trying to be more proactive in the sense of going through what we're seeing in the mornings, and I have to admit it's been a little more difficult for me recently because I'm just slightly under the weather. Those of you who've been in the chat room know about that. And I'm not getting up nearly as early as I used to be, so I don't have as much time to do my morning work. But once I get going, I'm okay, and I'm starting to feel at the point where I'm able to work a little better in the morning. So we're going to strive to talk about things that we're looking at, what's on our watch list for that morning, what looks like it might be moving, what might be actionable ahead of time, and that'll keep you alerted to these things in advance. So that's what we're trying to do. So, always trying to improve things, and it also does help to get good feedback from you guys in the chat room. And, if you have feedback in terms of emailing us, that's also welcome. So, the only way to improve your product is to listen to your customers and what they need and what they like. So, anyways, so you got Yelp moving. Let's see, a few other gaps this morning. Mercado Libre gapping up, but it's not really holding. It's red. It's a red day now because it opened up here and closed. It's right trading now here. And it's a very volatile stock. But I think it's interesting. A few weeks ago, I think when the stock was breaking down in here, we were on the chat room and everybody was talking about the Barron's article panning the stock, and of course that took the stock down and created a low for the stock. But again, points out how listening to Barron's isn't going to get you anywhere. On Tesla, we recall that they came out with an article somewhere in here talking about how overvalued the stock was and blah, 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 and it just keeps on moving higher. I noticed very light volume on the upside, so that's a little cautionary to me, but the same goes with any earnings report. When they announce next week, you going to hold the stock or not? I think it depends on what your profit cushion is and the size of your position. You could always cut half and hold the other half. I know someone was doing that on SunPower when they came out with earnings. Here's a pocket pivot, so strong action going into the earnings announcement, and then boom, the thing gets hit. I think that the solars have had a pretty big move, and it may be time for them to at least take a rest. I think most of them have lost some of their upside power, and the group's ranked #1 for a period of time, but that's mostly because they've all had these phenomenal upside runs. You look at SunPower, Solar City went nuts to the upside, and so this performance is what's keeping them #1, ranked #1 among all groups over the last 12 months. Because I believe, Dr. K, that's what the ranking is in IBD, right? It's for the last 12 months.
That's correct.
Yeah, so this is what's keeping them up, even though some of them are trying to base. You see Solar City on a weekly chart. It's closing tight in here. If it closes here, it is closing tight. Maybe it tries to break out after earnings, which I believe it's next Thursday. They came out the same day as Tesla. The one I think is a dog here is First Solar. And you notice it's starting to look. The problems here, I think, are you had a move here. It's really kind of muted. And I think the difference between First Solar and the other solars is that they focus more on these, I believe it's gallium arsenide chips or whatever, or different technology for their solar cells, and so it's less in demand these days, and it's less economically favorable. So the efficiencies of it are not as great. So I think you're seeing this big break here. Stock goes below the 10-week moving average. Now it's sort of fluttering, but notice how you're getting the stalling in here over the last 3 weeks, and stock's starting to push down below the 50-day moving average. And I'm actually short this thing today, so it's been looking kind of weak, but just one short I got out there on this one. So far, that's working to some extent, but I think that the solar group has lost a little bit of its shine. No pun intended. Well, okay, maybe a little pun intended. But this area, to me, is not an area of strength. I think you're seeing where you want to be pushing money into right now with the things that have been acting well and the Bible gap-ups that are showing up. I always think you don't need to own stocks into earnings, really. I mean, it's nice when you buy something or you own something into earnings, and you can feel real manly or womanly, as the case may be. That you bought the stock and you get a big pop on earnings, and you feel like you won it in Las Vegas. But you don't always have to do that. You can just wait for the Bible gap up. And I think you see the moves. In a stock like Truly, you see the move, or even Yelp is much better. You can see how this can work for you. If they don't work, you're out in a hurry. So I don't know about you guys, but I like to sleep well at night, and thinking about the upcoming earnings report, I'm going to sit through a big position, or sit with a big position through the earnings report. It's not really my idea of fun. So, my view is you can come in, and as you know, I like to come in heavy, so I can come and jam into something like a Trulio or a Yelp or a LinkedIn or whatever, and play it. And then usually, if you do get a Bible gap up like that, you get a lot of upside velocity. So that's really the type of thing that I favor. So, anyways, some other things going on. 3D stocks, another hot group that seems to have lost its luster. 3D Systems looking pretty good here. Is very tight along the 10-week moving average. Interestingly, despite all of the movement after earnings came out on Tuesday morning, I believe it was, it's actually looking like it's going to close tight. Now, I don't know if this is still viable or not. It's trying to hang out 47.24. It's holding above the 50-day moving average. It's below the 10-day. I don't know if that's so relevant for the stock, given the way that it normally acts. It doesn't really hold the 10-day. It's pretty volatile. But maybe it sets up again. They essentially are spending more on R&D, and their sales were through the roof, up 45%. So that was a very strong number. And it may now shift to more of a forward-looking situation. So maybe it stabilizes in here and maybe goes sideways tight and sets up again. That's a possibility. So I'd be open to that. But for now, I think
and X1 are also looking fairly constructive. Stratasys.
Yeah, XONE is holding up. Yeah, it's in a little bit of a base here. It's gotten some support outflows, but it's holding sideways. Going into its earnings announcement, Stratasys Another one is holding up, but I think a lot of these are just waiting for earnings to come out over the next week, I believe, or a couple of weeks. And Proto Labs came out and they got nailed, but look at the stock breaks down and comes right back. You get some big support here. Dr. K, do you call that a pocket pivot, or is that not really the type of action that would be
Yeah,
typical
no,
for a
it's
pocket pivot?
it still closed down on the day, so that would not be constructive enough to call it a pocket pivot.
Okay, so but it did clear the 10-day moving average on the upside. It's back up and actually closing above every level right now. If it closes at where it's trading at right now, it would be higher than any level other than the breakout the last few days. But this was pretty tight, but then it just kind of got clocked after earnings and sort of shake out. So this is still way up there, though. It's had a big run. You're several stages up, so maybe it was entitled to this shakeout, but it's acting okay. So
Yeah, and it might need to do a little bit more work, and then if it is a legitimate stock, it's going to continue its uptrend, then it will probably issue some sort of buy point in the days or weeks ahead.
yeah, so that group's kind of taking a break. Maybe it sets up again. Maybe it does something like Coors, which very volatile back and forth, but it broke out. Not really much volume on the breakout, but this is trying to move higher. Is it a late stage base? What do you think, Dr. K? Is this a first stage base here or an early stage base?
It's an early stage base. I mean, it had a great run when it was IPO'd, and then since then it really hasn't moved anywhere, and it's had a number of secondaries that's kept the lid on the stock. But if the number of secondaries is now at an endpoint, then maybe the stock has room to run to the upside. The earnings are looking good, so are the sales. Institutional sponsorship keeps growing every quarter, so it's one that actually, and looking sober at kind of, there's no buy point in terms of a pocket pivot, but it is a breakout. It is a legitimate breakout, and I think it's probably one we should probably mention.
Okay, stock ticks ended now that they come out with earnings in the middle of August, so might be advised of that. That's in a couple of weeks, so. Some other names. I'm going to go through some questions, so let's pop through these real quick here. CRZO, this is Carrizo Oil and Gas. No real buy points in the pattern, but it's just moving higher. You're seeing a number of oils acting pretty well. We put out a pocket pivot alert on VCEI, Bonanza Creek Energy, which had a pocket pivot yesterday coming up off the 10-day moving average. The prior day had closed right at the 10-day and it gaps up slightly. So we look at that as being a pocket pivot, since really the starting point was the prior day's close, which is right at the 10-day. So we don't necessarily look at that as being extended. Usually when a pocket pivot's extended from the 10-day, it's already been trading slightly above it. So that's generally how we look at that one. So this looks fine. It's a thinner stock. What does it trade on average per day? Something like 400,000. Very thin, but it's acting okay. The other fracking play that we had liked before was U.S. Silica Holdings. We actually had some of this. I didn't care for the action on the day of earnings or the day before earnings, so dumped that and it broke down. I think right now this thing is probably out of the picture. I wouldn't be holding it. I think if you bought into this pocket pivot, you're not down very much, 3-4%, and you're okay as far as that goes. So you could wait and see if it comes off the 50-day moving average or if you get a violation. But my thinking is when a stock doesn't follow through very well after earnings, I'm not really interested in holding it, and even if I do try and test a position off the support, it can't get some upside pretty quickly. I'm not going to sit with it. So that's generally my approach to these sorts of situations. I don't hang around too long, and I think in this case you have a big volume gap down. Not really worth holding, and it's not like anybody's jumping in to buy the stock. It's a different situation than, say, a Proto Labs, which gaps down, and then you see the stock close at the top of the range on heavy volume. So there's some money in there looking to buy the stock at that point. Anyways. Chuy's Holdings, another one, CHUY. Dr. K, you've always talked about this one. What do you got to say about this one? I personally don't mess with it. It trades 140,000 shares a day, or what is this?
Yeah, well, I don't like Dow. It's it's gone straight down and straight up. It needs to do more work before I get interested in this one. Also, it is a thin stock, small cap, so it's going to be a little more wild. It's a retailer. Retailers tend to be sometimes more choppy, but the earnings are looking good on this. The institutional sponsorship keeps growing over the 3 quarters. Since the company went public. Industry group is good. So yeah, I have it on my watch list, and I'm not looking at it now. It's just because it needs to do more work in its base.
Yeah, and you break out, you come all the way back in, and you're bouncing around. It's a tough one to hold. It's very thin stock. Another one like that is Gigamon, which runs up and then comes back in and is trying to comes out and then gets a good earnings report, so it's hanging out pretty well. I'd be watching for this to form another base. On this one, I would like to see it thicken up. In other words, I'd like to see the average volume picking up on this one for it to tell me that it's kind of growing up with respect to becoming an institutional type of stock. And so that's generally what you want to see. I think this is very early in its lifespan, so I think there's some time to see if it sets up. But had a good earnings report, nice move. But again, a thin stock where you want to be, in my view, buying on weakness and selling into strength. So. What would have to happen with Tesla to make you a buyer, Dr. K?
Well, I've got that one obviously on my watch list to look at for redeploying capital, and I just need to see, if it continues to uptrend, it very well could issue a pocket pivot off the 10-day. That's all I need to see. I'd love to get back into this stock because it's one of my favorites.
Yeah, I was wondering if you might watch for after earnings if there was a pullback. I'm sort of looking at this as an ascending type of base because here you have one pullback, you run up, here's two pullbacks. So here's my sort of hypothetical situation here is that you get after earnings, you get another pullback, and then it tries to come out again, and you get some sort of ascending type of base. That seems to be what it's trying to do. And
it definitely had an ascending base in May into June because the markets were weak. With the Nasdaq,
right.
Well, from May into June, it was in a downtrend, and Tesla, meanwhile, was able to secure a sloppy uptrend.
Right. So the other thing is an ascending base should form during a market correction. Part of this did form during a market correction, but now the market's obviously back in an uptrend, so that may be less relevant. But I've often thought maybe you get another pullback in here that could set up further upside. But the stock's had a pretty big run, and it's acting well, though. But, everybody wants to come in and short the stock all the time because, of course, it's grossly overvalued.
I think there was news that Fidelity Contrafund came in and took a stake in this again.
Yeah, that was Will Danup over in Contrafund. He wrote about it in his letter to investors. But the other thing there is that they bought this thing over, a couple of years ago. They started buying it. So they've had it for a while, and not clear to me necessarily that they're adding to their position. I'd have to check the sponsorship numbers. Let me take a quick look at that. They added to their position as of the June quarter. So, they had, well, it looks like they doubled, no, they increased their position by about a little less than 1.2 million shares in the June period. That would have been somewhere in here. So they're probably in here. They're probably the guys who were buying, and it's actually their reporting for the quarter ended in June. So they're probably in here. They're the ones driving the thing higher on the Bible gap up following their earnings report. So that was probably what was pushing that thing at that time. So. So you want to know who jacks these things when they get going like that? There's institutions buying them. So that's what that looks like to me. We talked about Triple D and SSYS. It's hard to determine if they're done. That's kind of a overly conclusive statement. Are they done? They may just need more time to set up. I still think the whole 3D thing is a forward-looking phenomenon. I think that you have to take that into account, and you're going to see things change, and probably over the next few quarters, probably see some good earnings coming in. If you start to see that, or if you see, say 3D break out set up tight and then come out again, then maybe it's telling you another move is ready. So, but it has had a long move. You can see this, I guess, as a big ugly cup with handle formation, and it's maybe not ready to go. But I don't know if they're done. It's hard. You think they're done, Dr. K?
No, I think that the action is the action seems to me constructive enough, especially since it closed in the upper half on the big down day. So there's a lot of institutional support that's still interested in this stock.
Yeah. So I would have to say, let's throw it up here. Just watch how it trades a little bit here. See what it looks like on my 620. Whoops.
And you got confirming action in SSYS and X1.
Yeah, it's trying to, if you look at it right here, it's trying to turn. So, on the 620, it's trying to make a turn. You came down, you tested the low, and you stopped, and now you're trying to turn here. So it's possible you could even buy, try and buy a little bit here if you were so inclined, and it's a possibility it could come out of here. So maybe I'll do exactly that right now. So I like to do this. You guys know I like to do this kind of stuff. We were doing that with Facebook last week. I'll get to Facebook in just a second. So, anyways, so you can see I'm picking up 5,000 shares. Just kind of get started here. So got filled at 2.9 and stock kind of holding in there. So I didn't really jack it, so it's pretty liquid. So I like that. So we'll see how this 620 buy signal intraday pans out. Last week, if you guys recall, well, Dr. K was in the beautiful country of Turkey. We were looking at Facebook right here at about 34.40, and it had a nice run up. So to me, that's a pretty big run up. You could sell into that, and I think the stock's going to have to back and fill a little bit. I don't think it's necessarily going to the moon. There is obviously some resistance around the 38 level, which is where it came public well over a year ago, back in
May of
2012.
2012.
Yeah, so I remember that. I was telling everybody I was in Rhode Island at the time, and there were some people. I was at a wedding, and some people at the wedding were talking about how they were able to get shares. They were all excited. And I was thinking, okay, if I'm at a wedding and there's a number of people at the wedding who got shares of Facebook, what's wrong with this picture? And because a hot IPO, really hot IPO, you don't see the whole world getting shares. So DDD is starting to move again. Look at this, not too bad. Maybe it's going to come out of here. Let's we'll see. It looks to me like the selling has diminished. Volume's pretty light today. So you're asking if Triple D and SSYS are done. I just bought a little bit, so that's what I think. Maybe they're not. Maybe they are. I don't know. We'll find out. Somebody asked a question. This is about LinkedIn, Dr. K. So here's, I think this might be a common situation. I own LinkedIn from the pocket pivot on 614, so that would have been in here, right here, this bottom fishing pocket pivot. And I congratulate, I guess, for holding through this, because this was really to me a sellable situation here. But you still own it there, and add it to the position on the pocket pivot on 711, which is right here. Okay. If the gap up fails today and the stock undercuts the intraday low of the gap up day by a few percent, do you sell your entire position or just the portion that was added on the Bible gap up?
Yeah, we had a question like this in email. I think we posted an FAQ on it because it's a very good question. And in essence, it all comes down to your risk tolerance. If you happen to have a very big position in this stock that's larger than you normally would hold, factor in that you've got a profit cushion in it, so you might want to sell half your position or a certain percentage of your position should it undercut today's low by, say, more than 1 or 2%. On the other hand, if you feel that the current position size is within keeping, then you might just sell the portion you bought today if it undercuts today's low.
Yeah, it doesn't look to me like it's going to. Actually, let's look at this on a 620 chart. You can see what the stock's been doing. You had the gap up, you had a little shakeout in here. I've talked about before, how do you, on a viable gap up day, how can you use the 620 chart on a viable gap up day once you have a low? So here's your low. And then once you get this cross, you could come in right at around, looks like 232, 233, and come in and buy the stock there using the 620 chart as your sort of your short-term guide on this. But if you get in at 233, 228.80, that was a low, right? You're like within 2%, 2.5% of your intraday low. So it's pretty reasonable, So that's one way you can use a 620 chart on a viable gap up day. So make a note of that. And it looks to me stock's pushing along. There's just some news hit. You heard Siri's sister, as I call her. LinkedIn target rates at 275 at tag, so that looks pretty good. Let's see, looking at a couple other things here. Yeah, it's acting fine. You see the selling, the red bars here. The selling is diminishing. So to me, it looks like it's going to go higher. So I bet you in the next couple of days it's over 240. That's going to be my guess. And you're buying it here. Even if you're buying it here, you're buying it within 4 or 5% of the low here, and I think that's quite reasonable. So 5% is 10 points, so you're probably closer to 4%. So it's fine right here. I think it's just going to new around. Maybe it pushes higher into the end of the day. It's kind of going to depend on what the general market does. Let's see. Can you discuss how you might add to a stock like ALNY? Well, oops, get out of here. How would I add to it? ALNY or
yeah,
here.
It's the biotech.
Ants. Someone's asking. Well, you're asking about if stock's up 12 out of 15 days in a row. Do you come in and buy it on the breakout after it pulls back? I think you had ants here. Looks like you're up 12 out of 15 days. Let's see, 1, 2, 3, 4, 5. I don't have the ants on this chart. I guess but what I would do here is look for a pocket pivot, and there isn't one here. So you're kind of extended in here, and you pull back. So I wouldn't necessarily be looking to add on this. Maybe it needs to go sideways. The 10-day catches up, and you look for a pocket pivot. That would be the best way to add. You agree on that, Dr. K?
Yeah, I mean, again, it depends on how aggressive you want to be on this one. But I mean, personally, yeah, that's what Gil said is it makes sense to me, and then of course it comes down to your position sizing and all as to how much you want to add on an additional buy.
Yeah.
I do like the gap up, even though it was coming straight up, but and it's a biotech, so you have more risk in this name. So I'll also factor those the risk into your position size, because it looks to me like it can be quite volatile.
Somebody asked if C-Trip was a viable gap up. Anything can be a viable gap up. I mean, it was a gap up move. It met all the parameters of a gap up move. It's sort of fluttering around. But, there's another question when you're looking at these situations. What are the earnings looking like? Is this C-Trip comes in with 36 cents, up 50%, sales up 32%. Prior to that, you had 4 quarters of negative earnings. Next quarter, they're looking for 22 cents in negative earnings estimate. So, it's not like this is the hottest thing on the planet here in terms of fundamentals. I know that you're getting, probably if you own this group, you want to own this one, I guess. And that this has been the one to own. It's had a few pocket pivots on the way up, like this one here, and this one here. I think we reported on these. So, the other aspect is when you're looking at a viable gap, it's not just the fact that it's a viable gap up, but also where is the stock within its space? Is it a leading group? Does it have strong earnings, a strong earnings record? Blah blah blah. All that stuff. So it's not just about viable gap up, buy it. But that said, you can always come in and buy a gap up move. Use the intraday low of the gap up day as your stop and come in. But I think your odds are better if you're going after stocks that have strong leadership status, and you try to focus there. Yeah, some of the cheesier ones are going to work, but you can't kiss all the babies, and you're basically trying to put yourself in a position of having the odds in your favor. And the best way to do that is go for the Bible gap ups where you see stocks that are leaders. And look, like a situation like Yelp, this had already broken out here, so it was already moving, and it is a leader in its space. And the mobile ad situation, as Facebook is proving, I think LinkedIn is also proving that. out is a strong area, and so Yelp, I think was a viable one. Trulia is another leader in its space, I think, and that one was viable as well. And so, those are the other thing is, it's newer. Trulia, for example, is newer merchandise. Yelp, for example, just recently broke out of this 1 year plus base here, and then you had a little, sideways movement here, and then this is your breakout, and you get started. This sort of thing is, within the context of all this, is kind of interesting. Whereas you look at C-Trip, let's take a look at this. This is kind of where C-Trip is at. It's like this big, ugly, not quite a pod thing. It's not short enough to be a pod, but it's in a weird, different position altogether. It's got some overhead in here, and so you have to look at those sorts of things. Another one someone was asking about previously was LifeLock, and it looks like my e-signal has decided to freeze up. And I think LifeLock might be better, but it's a cheap stock because you're coming out of this cup with handle, and if you look at this, there is a gap up move, but it is a cheap stock, so that might be working against it. And earnings, I think, are reasonable, but last quarter negative 40% earnings growth. I always love it when a stock jacks like that on negative earnings growth, but it is what it is. But I think this might be a less exciting situation. Another one I think was LQK, I believe. Did I get that right? I don't know. Suddenly the e-signal doesn't want to bring up the chart. Maybe that's LKQ.
I don't think. Yeah, I think
LKQ. Yeah, I'm being dyslexic again. So, there's a viable gap. If that kind of worked, company came in with 30% increase. Last quarter up 16. Quarter before that 11. So you're getting a little bit of acceleration. That one's probably a little better, but it gets up there pretty quick, and it's a relatively thin stock. Trades about 1 million shares a day. I'm going to guess a little bit over, and that's acting okay. But again, any viable gap up move that you see, you can go ahead and take a shot, and if it doesn't work, you're out pretty quick. So, like I said, you don't need us to bless things for you.
Yeah, and I'll keep in mind that LQK has it's no stranger to violating its 50-day moving average, and it's not the fastest name out there. So, in other words, if you're holding it and then you sell on the violation of the 50-day, you reverse a lot of your profits in this stock. So it's not something I mean, if you look at the weekly on it, you can see it's a bit of a slower mover, and the fact that it violates its 50-day to me means a lot of my profits, if I'm using the 50-day, will disappear. And if you're using the 10-day, you're nowhere because it's going to violate the 10-day with regularity.
Which one's
so
that?
It's a tough stock in that sense. Yeah, LQK. LKQ.
LKQ.
Got me doing it.
Yeah.
So yeah, that's it's just not my favorite kind of pattern.
Yeah, I'm not all that thrilled. Maybe it goes higher. BX, that was one we reported on as a viable gap up. It's holding the viable gap up. Slower stock, coming out of a cup formation, probably building a handle. You got some support this week. It looks okay. It's hanging in there. So we have some of that. We're okay with it. We're just kind of hanging. It's kind of the slower one in the portfolio, Michael Kors, let's see, is announcing 8.6 before the opening. Okay, thanks for that. Some sources I have say 8.14. And that's actually usually O'Neill's data. I don't know why they all. Yeah, O'Neill says 8:14, and if you go to briefing.com, you can just go there and type in the symbol and search on that, and they show August 6, 8 a.m. I don't understand why. Maybe you know this, Dr. K. Why? Because you used to work in the research firm. Why is it they can't get the earnings date correct? Well, I mean, it's out there, and other sources have it. Why can't they get it right? It's like, what are they using? Are they using some other service or something? I don't get it.
Yeah, it's a bit bizarre. I don't know where they're getting their info from and why it can be so inaccurate. It should be pretty standardized, I would think.
I would think so too, but who knows? How close to earnings would you generally hold off of action on a pocket pivot due to earnings roulette? There's really no time limit. It's more a question of if you see a pocket pivot going into earnings and you think that's a sign of strength and you want to take the chance of holding the stock into earnings, then you have that option. But you have to think about, to me, it's not like, the pocket pivot occurred 10 days before, so I can hold the stock in earnings, or it only occurred 2 days before, so I can't hold the stock in earnings. It's really not. That's not really the question you're trying to answer. the question you're trying to answer is, if the stock blows up on earnings, how much risk are you willing to take in a worst case scenario? So, if you think you could have held LinkedIn, as I say, I just kind of eliminate all of that because I think you can buy the viable gap ups. But on LinkedIn, you saw a pocket pivot in here. You saw a pocket pivot on this day, actually, even though it's stalled. Pocket pivot here on the breakout, and we reported on all these. So you had a whole bunch of pocket pivots. And what does it tell you? Whether it's 1 day or 2 days? What if you had one, 10 days early and one day early? What does that tell you? That not too much. It really boils down to the fact that if it blows up and it breaks down 20% and you own a 20% position, you're going to get hit for 4% to your portfolio. End of story. If you have a 10% position, it comes down 10%, you're going to get hit 1%. So I think in that case, that's really what you're looking at, and you can't tell ahead of time. I mean, look at Triple D. Before this thing was jacking on Monday, it was going nuts. Big volume breakout, coming out of this nice tight formation along the 50-day, and then the earnings come out and boom. So it doesn't really tell you anything with any kind of real certainty. And so I think trying to assume that there's some magic formula for how many days before an earnings report you buy and hold a pocket pivot, that's not the relevant issue. The relevant issue is how much of it do you want to hold going into earnings, and how much of a loss are you willing to risk in terms of damage to your total portfolio. So have there been any buys over the last 2 years that struck you as obvious at the time and that worked, or have they all been difficult? Well, they're always difficult. I don't know about anything ever striking me as being obvious at the time. I did think that, when I saw Tesla moving back here, I thought you just had to jump all over that one, and I did. It was risky, but I felt strongly about it. But it's another one was Triple D in here when we had this pocket pivot in here. I felt you had to jump all over that one, and you had a nice move. So I would say, Dr. K, would you say that does it matter that buys are obvious and work, or inobvious and work, or inobvious and don't work, or obvious and don't work? Is that a factor?
In the last few years, they're just they're not obvious and they often don't work. But in markets where the window of opportunity is clearly open, then they become quite obvious and they can tend to work in your favor. And you almost get a sixth sense for stocks that are going to work. And the 90s. Full of names like that. The window was open many times in the 90s. In the last few years, the window really hasn't been open, with a few exceptions, like silver in 2011. And prior to that, you had the late 2006 where the window was open and the pocket pivots were new. I was using them, having noticed how they worked with stocks the year before, and they worked beautifully, and it felt effortless. Those 3 months that I more than doubled my account, it just felt like I was in a trance, like very minimal effort, just utilizing the buy system that worked very well. But the last few years, it's like pulling teeth, and the markets grind higher, and they often are in a trendless mode, and it explains why so many people, so many veterans in this business are having a tough time with things, including trend following wizards.
Yeah, and I know people who are up, for the year. I'm up for the year, but in other situations, like with the MDM, I think that's roughly flat for the year. Where we've tried to implement a position building strategy, saying in our BMAP Cs, it's like slightly up for the year. It's been very difficult because it's been very rotational and choppy, and it seems like you really have to come in very heavy and take an inordinate amount of risk and run things very tightly if you're going to try and make big money. And that's really the only way I've been able to do it this year, is by jamming positions, very, very big positions, coming in at an inflection point where I think you're going to start to move, and keeping the stop really tight. And you have to be quick. And you also have to have a trading platform that allows you to be relatively quick. Some of these online websites where you got to go in and plunk around, and like Schwab, for example, I notice has been down on some days. That's not my idea of a efficient trading platform, or one that I want to be using necessarily if I'm trying to move very quickly. So I think that's kind of been the story of this year. It's been difficult, but
Yeah, I mean
I
the first
think
quarter was also it's particularly difficult because averages were up, and yet it was very difficult to find the right stocks to buy. And I mean on
right.
balance, I mean I'm up for the year, but it's not because of stocks. I mean I've had a couple of winning stocks, but I've also had a lot of losers. And I'm only up because really it's because of instruments like XIV that I pointed out in today's report, and also just sitting a little bit longer in that instrument. And also earlier this year, I was doing a short-term trading system that is an offshoot of the 620 that I call Crossbow. And yes, it was profitable, and yes, it works very well with real money in real time. However, it's really anathema to my trading style and to my psyche. I mean, I think a very important lesson is I was making money with the system, but it wasn't helping my head space. In fact, it was doing my head in. So I was making money, but it wasn't worth the price. So I retooled and created a system that's longer term that is much more in keeping with my trading style, and my profitability has been about the same or greater. So, but without the headaches. So I think that's a great example of always finding what works and what's not going to do your head in, because it's just not worth it otherwise.
Do your head in. Okay, I like that. Fleet Core, coming out. I think you had some pocket pivot action here, and I think they came out with earnings, right? And so the stock is gapping up. Is
Yeah,
that a viable gap up?
Well, the day before they were only up slightly, so I wouldn't call the day before a pocket pivot since it closes near the low.
No, this day right here.
But the day after, yeah, basically the day of the earnings.
Okay, yeah, so stock's moving higher.
But
You
was that
notice that,
volume? Did that volume come in after the close? Yeah, there was quite a bit of volume coming
after the
in.
close, right? And so that
Yeah.
might have, that's really what was pumping it. So, but in any case, stock's moving higher and coming out. Is today a good place to add to a position on earnings? Well, you could buy the Bible gap up, and your low is 94.21, which is about 5%, maybe a little less below. So the risk is reasonable. I don't really think it's out of control. Somebody asked, Gil, please provide some insight into your daily market prep process. We are trying to become more efficient and profitable. Well, in the morning, my thing is I go on briefing.com and I look at all the earnings announcements that morning and see what's gapping up. I have a pre-market screen on eSignal that lists all the gap ups for the morning. And then at night, what I like to do, I do my screening on my Wanda, but I like to use HGSI later in the evening, and I'll go to this warehouse ranking, and they have an automatic screen here, stocks and groups moving to the upside. You can see up here. And so what I do is I come in here, they have an ERG ranking, which I guess is a composite type ranking, so I rank them by ERG. And then I can come in here and I like to look at, let's see. Oh, come on, HGS, don't screw up on me now. The whole world's watching. But I'll go through this list and I'll look at the stocks that are acting well. So I use this kind of chart here. Come on now. And I use this sort of chart, and what I'm looking for is stocks that are, say, tightening up in here. Like, notice this is Santoris here. Let's make it a little bigger. It's tightening up in here, and you see how I use these force indexes. You have a 2-day and a 13-day, and when they start turning blue and the stock's real tight, coming out around a base, that's where I might like to start looking at a stock. You can see, let's see, let's go to, I can go to various buy lists, so I look at my buy lists, my current buy lists, and looking at, here's 3D, for example, but let's say like Fleet, noticing around here, it's real tight along the 10-day, but notice how the force indexes are starting to turn blue. You also have this Kahuna indicator, which I like, and you can see in this case it's flashing a buy signal here and giving you some ideas to the strength behind the stock. And so it's giving me clues, and so I run through my list this way, and I'm looking for stocks that sort of fit this. And I have a pretty good eye in terms of being able to see patterns in general and tightness in patterns and recognizing that. And that's basically what I do, every night. And in the morning, I'm just kind of reviewing the news and going through the earnings announcements and seeing what's gapping up and what else is going on in terms of movement. There's a number of sites. You can use briefing.com. You can go to seekingalpha.com where they'll have, if you have a watch list, you can put your watch list in Seeking Alpha, and they'll email you news items on stocks, earnings reports, whatnot, as they're coming out. So even if somebody, like if Barron's comes out and pans your stock, like Mercado Libre the other day, telling you that it's a piece of garbage. Let's see, is this one going to dog on me? You'll get an email telling you that that's happening, so you know what's going on. That's basically. So I use this program. I like it, and I like some of the indicators that they have. I also like the ranking modules. Are pretty good, and you see a lot of ideas that normally would not show up using standard O'Neill stuff. Because I can tell you, Yelp, for example, was an idea that hit me a long time ago, and it showed up here first. And I think that this is more technically oriented, and in this market you might notice that a lot of stocks that aren't necessarily, they're leaders, and the technical action is what points them out as leaders, but they're not necessarily classic O'Neill type stocks in terms of the earnings growth and the sales and whatnot. So there's different things going on and different themes that drive. I mean, obviously, O'Neill work didn't get you into Tesla because there are no earnings there. But we were talking about Tesla in the 40s in the chat room, and it kept coming through this screen every day. And Solar City, when it was 19, the same thing. So I'm watching, what's new coming through the screen, and where am I getting new ideas from? And I think this is a great source. I think these guys do a great job, so I like this program. And it's one of my mainstays in terms of my nightly work. So let's see. I hope that helps. Let's see. We got to get through some questions. I got a bunch of questions. I'm going to fly through these. Why? Is this an exhaustion gap? No, I don't think so. Do you think so, Dr. K, real quickly?
No, it looks like a potential leader. Yeah.
AVG, I use these guys. Thoughts on it? It's a big volume gap down move. Don't really care for that. Looks doggy. Splunk, looks like Splunk will have a pocket pivot today. It's close. I mean, it needs to get above this volume level right here, which is 1,229,000. So yeah, it's close. They come out with earnings.
Well, it says on the end of the month, but I don't know if that's reliable.
Well, it's already the end of the month. August 29th.
No,
that's
end of August.
That's reliable. August 29th. If it's coming out of briefing, it's reliable. So you can
okay.
bank on that one. Let's see. What else? If Tesla had a big gap up on earnings, would it be a VGU or too steep of a chart? Good question, Dr. K.
No, because it's got such strong leadership characteristics, a gap up at this level would still be viable.
Yeah.
See, it's contextual. So, in other words, if it didn't have the fundamentals, I don't know, some of these thinner names might have these big dramatic run-ups, and then they have a gap up from there, and I wouldn't touch that gap up. But Tesla is an institutional quality stock. So given what we know about the institutions and how they feel about the stock, a gap up at these nosebleed levels is not really a nosebleed level. It's actionable.
Yeah, I mean, this is really just an uptrend channel. So you'd be coming out of this uptrend channel. I don't know if that becomes a sell signal. Somebody asked me, do you subscribe to the O'Neill rule that you should sell when your stock is 50% past the 50-day moving average? If that's true, then here's a 50-day moving average on Facebook, and you wouldn't even bought this viable gap up. So I don't really think that works. So maybe it's contextual. The stock's already been up for a period of time, What tools? People are asking how we find out fund data. Bloomberg has the most current, I think, and comprehensive institutional data. O'Neill has the same data on their institutional products, and I do think they let individuals subscribe to it now. So if you want to spend $20-something thousand a year for that, you can do that. But you have to be able to afford it. So, but I think you can also go on to Yahoo Finance, and they'll give you the lowdown on the institutional ownership of a stock and who's buying it and whatnot. Oh God. Someone says, "Hey Gil, regarding the new and improved pre-market pulse, would you be able to give some sort of rating or qualifier to pocket pivot and Bible gap up reports, like a scale from 1 to 5, 1 being eh, 5 being OMG, buy, buy, buy." I don't operate that way, so I can't give a rating to something and say you got to buy this. If we put out a Bible gap up, it generally means we think it's viable, but I don't really get into certain things or oh my God, you got to buy these things, you got to be all over these right now. If I feel uh, like it looks reasonable to me, I'll go in heavy, and but I'm running a tight stop. I don't know if I can say to other people ahead of time whether something is an OMG buy. That's a new rating we'll use.
Depends on
Now.
one's risk level as well,
OMG
because
buy, yeah.
a volatile stock may be an OMG buy to one person, but would fake out another person because it's just too volatile for them to hold.
Yeah.
And it's also the reason ratings are generally not a good idea. It should be more binary. It is viable or it's not viable. And even in the best markets, like in the 90s, the best guys out there, and this is, I'm speaking from the perspective of being one of O'Neill's portfolio managers, and also knowing what happened with O'Neill and David Ryan in the best kind of markets. These guys had great returns, but their success rate was generally no more than 50%. So if they were to have tried to assign point value ratings to what they're buying, I think that would have been added noise to what they're doing.
You don't operate that ahead of time. There's no such thing as knowing for certain. You're trying to instill some sort of certainty into the market that just doesn't exist. And what happens usually for me is I'll come in and test something out, and let's say I come in on this morning on LinkedIn, and it's at 133 or something, or 233, and it looks like it's getting some push here, and so that'll get heavier, and I'll use every little pullback to come in heavier, and so it's reinforcing in real time. So there's no way to know ahead of time. I wish there was. I could make you guys tons of money by giving you OMG buy signals all the time, but it doesn't work that way, unfortunately. I'm sorry to say. We're going to run through some quick ones. We started about 5 minutes late. WPX, just hanging out at a base. I'm not a buyer, cheap oil stock. ACAT is trying to break out again. You had a pocket pivot here. So this thing runs up, pulls back, goes up, pulls back. It's a thin stock, biotech, a lot of risk. It's had a pretty good move so far. I'd be cautious with it. So, we've owned it. I trade it, basically. CMG, a punch bowl of death. No, I don't think so, John. This is too big for one thing, and it's punch bowl of death usually goes straight down, straight back up, and in this case you build bases on the way up, and I think what that does is help to consolidate the stock and help to solidify the move as it's continuing higher, and instead of putting it in a situation where it goes straight down, straight up. Because the thing is, if you go straight up, you're not really consolidating the move on the way up, working out the weak hands, bringing in the strong hands. So what happens essentially is it's just going straight up and it has no support, really, support levels underneath it. So it's susceptible to an instant collapse. So we've already talked about fleet. Overstock, it's a Bible gap up. Dr. K, do you sell this on the basis of your 6-day rule?
On the basis of my 6-day rule, OSTK, well, essentially, if the stock trades for more than 6 days, and then you don't give it any porosity if it heads back down to the low of the gap up day. Mm-hmm. As far as the stock has been going sideways, the market meanwhile is moving higher. So at this point, I would be cutting back or selling the position, provided that there was another stock out there that looked better. Because the stock doesn't seem like it's really wanting to move. But if there's nothing else out there, I'd probably still continue to hold this one, simply because well, at the current levels, it's trading at 33 and a half, and the low of the gap up was 31.62. So you've got a risk of 5.6% at current levels. So factor that in.
Okay. Let's see here. Somebody asks, how do you handle a stock like Trulia that doesn't have a 620 cross? Well, you're right, it doesn't. Not all of them do, but I'm talking about the ones where you do get a 620 cross during the day on a pullback, like LinkedIn did. That's where you can come in, and buy the stock. Whereas in something like this, it's already by the opening 6:30 my time right here. It's already moving higher. So in that case, you could just buy it there and wait for it to if it starts to break down, then you might back out. But if you look at say LinkedIn today, watching this morning, it did the same thing, and but by the opening, just before the opening, it dropped through. So it was below before the opening, coming in right at the opening. So that's a situation where it comes in handy, but it doesn't work all the time. But that's just one way that I use it. So let's see. I am watching Trulia right now. I think it's acting pretty well. It's hanging in there real nicely. Low today was 42.59. Let's see. So got to finish up here real quick. Cree, just a little pullback after yesterday's pocket pivot. Nothing going on there. IMMR Immersion Corp. It's another cheap, thin stock. Trying to come out, but it's stalling. So I don't know. I don't get excited about that. Yahoo. No, that's someone just mentioning. They have earnings dates. Qcore. That was a Bible gap up yesterday. Now it's coming in. So I don't really have any thoughts about that other than if you got it early in the day on the Bible gap up, then you're up on it. And but it's had a couple of Bible gap ups in the pattern. One here actually, and it's just pulling back. There's really nothing. It has a big move. You kind of got to expect it to pull back. I mean, the thing goes from what 53 to 70. So it's up there. What do you think of INVN? I think in VenSense on the breakout, it's a buy, and it's a buy and hold. It's acting fine. Don't worry about it. Just it may come in, but I think the stock is starting its move. That's what I think. It's actually one of Dr. K's favorite stocks.
Yep, that one in Tesla.
VIPS is just hanging in there. Nothing going on here. We had the pocket pivot way down there, so we got you in at 32. Its stocks run up. It's just holding in. Acts fine. NSM. Holding up, you have a breakout here. You had a bottom fishing pocket pivot down here, I think, right in here, somewhere right here. And it broke out. OCM's another one, broke out yesterday, and they're just holding up. There's nothing wrong with these. Pulling back, but they run up a lot and then they pull back, run up 3 points, pull back a buck. Not really, not really much in terms of. Abnormal action looks fine to me. Someone asks, how do you pyramid up in today's environment? Slow in, or I go in heavy at the initial position and I trade. So that's what I do. It's all judgment. Given the higher amount of breakouts in BGUs, it seems that the character of this market may be changing. Do you think this is a factor of QE or possibly coming out of a bear market, a bear megatrend? What do you think, Dr. K?
Well, I mean, it's better to be more dynamic and just notice that you're getting more buys, Bible gap ups, pocket pivots, and rather than trying to know why, because when you try to figure out why, it can often make you mentally stuck in the idea, and markets are dynamic and ever-changing. So I think a lot of this intellectualization of the markets is more likely to cost someone money than to make someone money.
Let's see, other question here. Do you consider short interest before entering the trade? No. I mean, I like to see heavy short interest in a stock that's acting well. MarketSmith gives ownership info as well. So, and it's pretty, it's an institutional sponsorship, you guys. So, it's out there. MTZ. Mastech, I don't know, it's a choppy stock. I don't really care for this. I've tried it a couple of times, traded on upside moves, and it's not really going anywhere, so it's kind of boring. Actavis is acting pretty well. We reported on pocket pivots along here, so you had a breakout and it's holding up fine. Not a problem. Let's see. Somebody says, based on the lateness in the bull cycle and the leadership of small caps and risky stocks, aren't we closer to a major top than most think? You won't know until you get there, so if you're into guessing, good luck. Your thoughts, Dr. K?
Yeah, it's best not to try to guess when a top's going to happen until it happens. When you're in the middle of a topping process, that's when you start to make exits because your stocks will hit their sell stops.
Yeah. Dr. K, is money coming out of the bond market a factor fueling the stock market now in addition to QE?
Yeah, that can be a factor, sure, because the money's got to go somewhere.
Yeah, I mean, I look at it that way too. You know, money is coming out of bonds. It has been at least. You know, the long end's been making new lows. You look at the short end here, 3 to 7. You know, it's been correcting. So money is going to come out. I think over the next couple of years, bonds are going to be a disaster. So I don't think you necessarily want to be playing with bonds right now. I have broker friends who are heavy in munis, and you know, you got this MUB getting tagged. You know, June was not a fun month for them, but I think that you know, people who own bonds are going to have some pain going forward. Last question, okay, before we sign off. Why is InventSense one of your favorite stocks?
Well, it's got a compelling story. It's a first mover, those are two very important characteristics. The earnings and sales continue to be strong. Institutional sponsorship had been growing in every quarter since the company went public 7 quarters ago, up until the last quarter, and that's forgivable simply because the stock has gone through a fairly substantial correction. And if you look at the weekly, however, it looks like it's coming out of that correction fairly well. So it's one that I'm keeping an eye on, and hopefully it will, you know, continue to move out of this long basing pattern it's set up.
Yeah, I mean, I tend to think of it as a stock that you know, there's a lot of the story is very forward-looking. If they get some more design wins and more substantial stuff with the iPhone and other technologies that are coming out, other devices, you know, if Apple comes out with these supposed wearables, I got to think that they're going to have some of their chips, and I think their solution is probably the best one right now in terms of this motion sensing. So, you know, I see this as being a potential longer-term hold. You know, I'm always looking for the next C-Cube because they were video chips back in the 90s. I thought Ambarella might have been it, but not happening there. That's broken down, looks like. I never liked the stock, though, kind of choppy and sloppy. But I think InventSense has a potential to move higher. And these guys have a great financial position, no debt, you know, and I think they're a strong position within their industry. Anyways, Dr. K does not use HTS software, only I do. Anyways, that's all I have, you guys. That's all we have today. But, you know, the Bible gap-ups are working. Just watch for those alerts. Watch for the pre-market pulse. And I hope to see you guys on the chat room. Which
Yeah, I wanted to mention one just quick thing on
yes.
INVN. There's you pick up the buzz on these devices like Leap, which is claims to be the world's most accurate 3D motion control technology for computing. And what I like about all the buzz, I mean, there's a lot of people who know what Leap is, and they're excited by it, and that bodes well for companies like InventSense. In other words, I think the trend, the next killer app is going to be in this area, and people are going to have wearable computers, and that's going to become maybe more of a mainstay.
Cool, so I can have a head-up display to trade when I'm in the hospital next week. Anyways, all right, you guys, that's all we have. So any questions, just email us, and we'll catch you next week. Take care.
So long, everyone.